Hey everyone, welcome to the KE Report, another daily editorial, this time focusing on this continued pullback in the broad markets. We're also going to get into Bitcoin, potentially touch on nat gas and uranium as we are chatting with T.G. Watkins, Director of Stocks at Simpler Trading, also editor of the Profit Pilot website, which we will include a link to in the show notes. TG, look, let's start off with these broad averages. This pullback slash weakness has been here for about a month now. And look, these markets on pretty much a daily basis seem to get some selling throughout the day. Some of the recent pops have been very short lived, and it seems like traders are now more selling the rip than buying the dip. What are you seeing in these markets within any of your charts?
Yeah, and for me, I'd actually say this pullback is more onto 6 or 7 weeks because for me, looking at the small caps and the equal weight of the S&P, December 2nd was the top of that market. And so that's where I see that's where I'm timing it as far as the beginning. Here we are, January 13th, and the market's still pulling back. So after 6 weeks, it could go longer, of course, but I think that as far as this particular pullback, the S&P is now coming back down to it's actually just below its weekly 21, and usually around that area we do tend to see a bounce, probably a prolonged bounce. And we also have breadth that is basically kind of washed out. 20-day SMA breadth got down to the lowest of 8%, and now it's at 24%. So we've seen a little bit of a rebound on that. And then 50-day SMA breadth is still hovering around 17 or 18%. And that is a pretty darn low number. Of course, it can go lower, but I'm seeing it stay there and not really be able to get much lower. So I'm kind of looking for some sort of multi-day, hopefully multi-week bounce from this point. We'll just have to see, but I don't want to be shorting at this point. I mean, this seems a little bit long in the tooth on the short side to be looking short.
Well, if any of those levels were to break, is there anything that change your mind to the downside? I mean, the odds are that after this big of a washout for 6 weeks that you're going to see an uptrend. But if there was a continuation pattern, what would you be looking for?
Yeah, that's gonna be hard. I'm really just not gonna be looking at that way. We do have PPE tomorrow, and we have PPI tomorrow, and then CPI on Wednesday. So I have a feeling that's what the market's waiting for. And you know what? We like to kind of think about conspiracy theories and stuff like that. And so these prolonged moves down, especially today, could kind of provide some washout material or kind of get everything down that if PPI and CPI come out in an acceptable number and the market's okay with it, this could actually provide some pretty good grounding for the market to go up. Now, if CPI and PPI come out hot and the market doesn't like it, sure, there could be more downside, but I'm leaning more towards the upside. I'm just waiting. I got a bunch of maybes out there, and I got a lot of things that are potentially setting up, but I have no triggers yet. So that's why I'm just having to be patient, and we'll see what these reports do for the market.
So for the positions that you're riding out right now, are you tightening up some of your stops? Or on the flip side, are you looking at potentially cherry picking any sort of quick little washouts or any sort of new uptrends to build more positions in clearly the stocks that you still like?
Well, let's first start back on a couple things. So on Monday, the 6th, so last week, the market ripped after the new year and all that kind of stuff. And my accounts, I have a variety of accounts, and basically all of them hit a high water mark as of that day. So I'm pretty encouraged to say that, after a month of the market already pulling back, and then it gets a pretty good move for a few days, which tops out on the 6th, basically, that my accounts were at new highs. And so, yeah, they're down and they've given a lot back over the last week because the market made new lows. But I'm kind of encouraged that the names that were in were pretty strong relatively, and that we'd also done a good job of capturing profit while we had a good run leading up to December 2nd. And so things like SoundHound and Tesla and HNST and Toast, we were taking profits along the way and at the top and then got out of those names. But then other names that we've had to manage are something like, AFRM. We were in that position and we actually took 50% off. So let's add about $70. So that was about a 45% gain. And then I just got stopped out of it late last week at $55. And I gave back some, but it's still a plus 14% gain. So both of my trades on that were profitable, even though I gave some back. And so that's kind of how we've been managing this. So, something like AFRM, I'm out of it. But I think these names, the way I'm looking at them, they are getting a little bit stretched to the downside. And I think that the market is kind of getting ready to move up. Again, I think we're going to have to wait for PPI and CPI to kind of act as a trigger, it seems, if that's going to be the case. And then this is how we manage it. And other than that, we're out there kind of looking for names that are holding their own and setting up. And, I'm seeing a lot of maybes, as I said. And that's kind of where we can dive into, say, some of the cryptos. MSTR is a name that I've been watching. Irene is another name I'm watching. And I'm starting to see potential double bottoms on these on the daily and hourly time frames. And so I'm encouraged, and I told my subscribers what we're looking for, and I made a weekly video. I even actually made a market update video on YouTube if anybody else is interested, Profit Pilot YouTube video. And I said, we're close, but we need to see follow through. And obviously, we're not seeing that today, but that's what I want to see for this week if it actually happens. And so that's how we're kind of managing all these things and working through this pullback, and honestly, just sitting on our hands a lot, just kind of waiting for the market to do something.
Well, TG, you said a couple of key things there that I hope people heard. That A, you took profits on the way up in some of those stocks, like Tesla, and rang the register when you had the gains. You had stop loss orders in place to limit the downside, and you still exited with a positive trade in those cases. And then sometimes it's best just to sit on your hands. You don't always have to be buying or selling. Sometimes you have to wait and let the market come to you. Some great points you just made there for people. Hopefully people digest those. You brought up the cryptos, though. A lot of interest in Bitcoin, a lot of interest in crazy stuff like Fartcoin, but there's also a lot of interest in the crypto miners. How are you looking at Bitcoin? And you brought up some of the miners there. What specific levels are you watching in things like Mara or Irene?
Yeah, so even Bitcoin itself, if you look at that, if you look at it on a monthly and weekly time frame, you could just see that they went straight up. It's just unsustainable. They started to really pull away from their moving averages on those time frames, and so it's natural that at some point these things are going to pull back. The question is, how far are they going to pull back, and how long are they going to pull back? And it's the same question with the market right now. We never quite know. This is always what I have to tell my subscribers is we were able to kind of pinpoint the top of the market because breadth had gotten excessive. And I said, hey, we should be expecting to pull back. And great, we got it. But now it's kind of going on like 2.5 weeks longer than I kind of thought it was going to be. But that's okay. It's just how the market is, and you just have to be prepared for it. And Bitcoin itself is sitting right on the daily 50. So that's going to be an area I'm watching. It doesn't have to hold. Like, I'm not just going to go blindly buy at the daily 50, but it is a key level that I'm looking at. If it happens to go below it, that's still fine. I'm going to wait until I start seeing it turn up on something like the hourly chart in order to prove that this thing is ready to go. And as far as the Bitcoin miners, some of as I've said before, they are not all created equally. Some are better than others. Mara has kind of fallen out of favor for me. Some of the better ones I like. I'm looking at Hut, looking at MSTR, Irene. Wolf is kind of a maybe. And even Cypher is doing a little bit better. But, if you look at something like Hut, it's pulled back to its weekly 21 and just below its daily 50. Okay, not too bad. And as I said, I'm looking at the hourly chart and I'm seeing potential double bottoms set up. I mean, right now, Hut is making a higher low. Now, do I know that this is the low right now? No, but I'm just aware of it and I'm waiting for it to actually hook and then hold moving averages and start trending to the upside. And when it does, I'll jump right in and then we can ride the next wave for this. So we're just, as I said, sitting on our hands, being patient. I know what I'm looking for, and we just haven't seen it for a few weeks. And, whether it happens last week or 3 weeks from now, that's okay. We know what we're looking for, and we just have to be patient for it.
Sensing a theme here, TG, waiting for these rebounds to come and then riding that next wave higher when or if it comes. What about nat gas? Let's talk about that market, because out of all of the, I guess, laggards right now, which there are a number of, look, nat gas is doing quite well recently, up to $4. Look, nat gas can be very volatile. It is colder out there, and I know it seems kind of crazy just to follow the weather, but that also does drive the nat gas price. What are you seeing in the nat gas chart?
Yeah, I've been hearing that, cold weather, of course, that's a thing. But man, natural gas has been just, in a downtrend ever since the peak, I think, of the Ukraine war, where basically in 2022, that thing just has been going down. And it has been a very long time coming. I've been watching this for quite some time. And I'm still going to be a little iffy or a little cautious about natural gas because it's challenging. It can look like it sets up and then doesn't. And so just challenging with that. But what I will say is if this is going to move, At least on the weekly chart, we have the weekly 8 over the weekly 21. So fast moving average over the slow moving average. That's good. But mostly we now see price over the weekly 50 SMA, and that's a change. We can also look at the monthly chart, and the monthly chart has had price kind of, pop over the monthly 10 a little bit, but now we actually see that we have two full bars over a now slightly upturned monthly 10. So if this is going to go, it's now starting to have the higher moving averages, higher time frame moving averages in its favor. And so now we're trying to look to see if this is going to have follow through or if any of the pullbacks from this point end up being viable. And if you're interested in it, that's how I'd be trading it. But yes, I'm seeing better development with it.
Yeah, it's been an interesting sector, but natural gas is always very volatile. But at least, like you say, those bigger moving averages starting to line up in its favor. Keep following along with the Widowmaker. But kind of the reverse side of this in the energy space and the commodities is uranium, where it's been dipping down and trying to find a bottom. How are you looking at the uranium ETFs?
Well, kind of the same thing that we've seen with, well, Bitcoin basically. Bitcoin miners, they said, hey, there are potential double bottoms. So the last time that the three of us spoke and we talked about something like URNM, I was looking for it to hold the daily 50. It didn't, and when it didn't and it moved down, fine. If it didn't hold the daily 50, I would be out. And so now you just say, okay, I'm going to wait for the next opportunity. Well, URNM bounced and then pulled back again to its now previous low. So I'm aware that there is some support here. That's why it bounced in the first place. And that is basically the definition of a double bottom, is that if it can continue to hold that low and move up, then it's going to be viable, and that's a good level. So we're right at the point where it's kind of do or die. If this pullback right here can hold right about, for URNM at $40 or so, if it can hold this and start to move up and continue to move up, great. That's your level. That's some support. We can buy it. Same thing with the Bitcoin crypto miners and all that kind of stuff. That's what we're looking for. URA is kind of doing the same thing. It's a little bit heavier, but it is now trying to decide what it wants to do right here at this double bottom, about $26, $27. If it does not hold, no problem. There was never an entry. Step aside. Let it keep figuring itself out. But if this area holds and starts to move up and is supported by moving averages, then great. Let's give it a shot and see where it goes.
So is following along with the moving averages the most important thing then? Because sometimes these things can hang around these double bottoms, and then it can be a real mixed bag in terms of if it's still a double bottom, if it's just flatlining. Moving averages sound pretty key to some of your analysis then.
For me, it is, and for other traders, they like to use levels or they just trade differently. For me, I'm less of a levels trader. I'm aware of them, but I need stuff that moves. I mean, if you're going to be trading options, or if you really want to be making money with something that actually goes up or starts actually appreciating, well, you're going to want it to move, and that means it needs to start following moving averages. If I find that I get into something and it kind of pops up and comes down and doesn't really do much and it chops around, and it's really not following a moving average, but it kind of cuts through it, well, then I'm in chop, and that's not going to do me any good. And so I don't really want to be trading that. Let me just step aside here for a second. I know DJT is kind of, if anybody can have their opinion about that stock, but I noticed today that that stock was up. And I've been watching it just for entertainment purposes because of where we're going to be going for the next 4 years. And it is amazing how well this stock actually trades with technicals. I'm just impressed, considering how closely related this stock is going to be to politics. But over the last, let's see, since mid-December, this thing has been in a choppy pennant. And if you're looking for when this thing's going to finally move up and out, I noted this morning that when it started to take off, and I was on the mic 30 minutes after the open with my subscribers, and it still hadn't gotten too far away. But I was showcasing this thing just from a technical standpoint. I said, look, if you want to see when these things actually go, because right, moving averages to me are important. I want to make sure that this thing's going to go and make money. If you're interested, or any stock that is doing this, look at the 15-minute, look at the hourly. And this morning, you can see that price perfectly came down, tested the 15-minute 50 and the hourly 50. Plus, I got all these Moxie price triggers. And then look where the price is up today. It's up 15% just today because it held these moving averages. And if you look back over the last month, you can see it just kept cutting up and down, back and forth through moving averages, and it wasn't going anywhere. So that's why with something like URNM and URA or any of these Bitcoin things, I'm looking for price to hold moving averages because that means it respected that technical level, that support, it wants to go, and now we can make some money on it, whatever stock we're trading.
Well, just even digging in a little further to this concept, I think this would help a lot of people in their trading, TG. When you have a stock that's broken above key moving averages and it's staying there, and then it respects it, meaning it comes down and maybe touches the moving average and then blasts up higher, is that where you generally make the most money in a momentum trade? Or are you looking for scenarios where you've seen them break down to a key moving average as a turning point, and that's where you're positioning? So are you more on the momentum side or more on the catching the turn side?
Well, it's both. I mean, if we're going to be trading trends that could be lasting a few weeks to a few days, they're going to be all of that because, in one sense, and this is where I have my entry, and I also have dip buys. I think those are the two questions. You're like, well, is this a continuation or is this a buy the dip? And I think that as a swing trader and a momentum trader, you kind of have to do both because you can't always get just continuations. Yes, it's going to follow the moving averages, but there will be times where it dips below, and you either need to not panic and get out when it dips below it, or you need to know to add more, buy more when it dips, but you got to make sure that's a buyable dip. And so I think that's the skill of and the challenge is trying to figure out when price dips, is it an exit? Is this a problem? Do I need to get out? Or is this buyable? And this is where I have all my rules and parameters in the Moxie indicator, and we talk about different time frames to help figure that out. Because even if we're looking at cart, the Instacart, you can see that for the last several weeks, Instacart has been below the daily 50. Well, is that a oops, I need to get out, or is that a buy the dip? And in my world, based on what we've seen in the last week, actually, because cart is holding up amazingly well, that turned out to have been a buy the dip situation, and we were loading up on this thing around $42 for quite some time, and now it's at 44. So yeah, I think it's a little of both, and I think that's the both the skill and the challenge of being a trader.
And to learn more about how TG trades, though, go visit his website, Profit Pilot, and go onto the Simpler Trading website and follow along with TG. TG, always great chatting with you. Thanks for sharing some of your outlooks on these markets. And again, kind of the big takeaway being, let's see where the next direction is for these markets. We could be setting up some nice bases here, but hey, only time will tell if these truly are bases or if we do have another leg down ahead of us. TG, great chatting with you. We'll chat again in a few weeks. Thanks for your time today.